Nvidia, of course, just announced their financials last night after market, and meh, so-so. Growth continues, but not nearly as fast. And that's really the key bullet point you need to take a look at. Today, I want to look at SMH ETF, which is one of the semiconductor ETFs, as well as SOXX ETF, another semiconductor ETF. Now, those two ETFs are likely to move lower. Nvidia itself, I'm sounding the alarm simply because growth rates are slowing. Nvidia right now is priced fairly appropriately, but slightly overvalued, overpriced, and likely to move lower. I could see Nvidia's stock moving down below 100 by the end of this year easily, probably before, say, summertime. We've got a lot going on with the economy first and foremost, and that's where everything starts when it comes to my analysis. What's going on with the economy? Beyond that, what's going on in outliers? And I do want to take a look at Tesla. Tesla could easily sell off, pulling all of these stocks lower, Nvidia stock as well. The semiconductor ETFs are probably going to move lower along with Nvidia, of course, being one of the key components in there. So looking at SMH ETF and SOXX ETF, these are two of the key semiconductor ETFs. What I'm moving into pulled off a little bit of a move last night. SOXS ETF. This is the inverse ETF for semiconductors, and I've been getting involved a lot lately with these inverse ETFs simply because that's it. We've seen the highs. We're approaching an economy that is likely to contract somewhat. We're looking at a stock market that is overpriced. You're looking at Tesla with 150 times multiple PE and likely to moderate significantly, which would bring, say, QQQ ETF downward. Nvidia, who just got a downgrade from an analyst, a little boutique, but nonetheless, it's starting. Nvidia stock itself will move lower. Those two are really, you got Apple, Amazon, the big players, the so-called Magnificent Seven, are likely to move lower. Nvidia not putting up numbers last night that were overwhelming is likely to move lower. That was one of the key things. Stock market has been waiting all week on this one. So I want to break down individually all those aspects, looking at the semiconductor ETFs, looking at the inverse semiconductor ETF, SOXS ETF. This is one, I pulled a few bucks out real quick. I will continue to do so. This one is going to get a lot of play out of me because I believe, of all things, the economy is going to slow, contract. Tesla will sell off and it'll pull everything else out. And because Nvidia did not put up an overwhelming number, that's where it all begins. We've seen that the end of this, the beginning of the end of the bull market has just begun. It's time to make some money in the stock market. All right, bit of a long intro on that. Sorry, but there's a lot going on. We are beginning to see a big shift. So you're going to want to follow along. For those of you who are just finding me, my numbers are starting to grow consistently. I am going to be consistently putting out content. Not everybody goes to YouTube every single day. Substack newsletter. What I'm doing, I'm kind of shifting that a little bit. So this is an FYI on that. And I'll continually announce this simply because to get the word out there, I know not everybody's going to be looking at this particular video. I'm going to be I'm more likely than not going to be producing long form videos on a daily basis, Monday through Friday, excluding holidays. We'll send out a Substack newsletter with that video, short little blurb. There will also be my premium content where I break down economic analysis and how it affects the stock market. That's behind the paywall. I do appreciate all the support. Thank you so much. It continues to get the content out there. So for those of you who are subscribers, thank you so much. You can get the Substack email newsletter and simply get notified, hey, there's a video up there. And here's a quick blurb on it. Get the video. You can get it in Substack or the newsletter itself. So make sure to subscribe there. Let's take a look at NVDA stock, Nvidia stock. Not exactly overwhelming, and that's bad news. There is growth. The growth rate is not going to be nearly as much. Those are your sort of big bullet points. Now, yeah, they did exceed expectations on revenue and profits, but looking forward, they've not overperformed like they historically have been doing. Nvidia stock has run up significantly, but I believe that's done for a couple reasons. And here's another bullet point, sort of takeaway that I think is such an important thing. Once you get Facebook, Google, Apple, all those bigger players, once they build their infrastructure, how many more chips are they going to need? Sure, they're going to go ahead and buy chips along the way. And of course, Nvidia is more than just AI chips. They are cloud servicing, doing AI products as well. There is growth in there, but a big chunk of what they're doing are the AI. This is where all the growth is, those AI chips. All right, once those big companies buy those chips, sure, they'll need to upgrade on a continual basis. But I do not believe that Nvidia can maintain a consistently growing revenue base from just replacing those chips. Even though we've seen a big, huge run up, this is something that I've been saying, hey, once they get that hardware, the shift would be services, software as a service, things like this, where AI companies are going to outperform what Nvidia has already done. That's been a big thing that I've been mentioning a few times in my videos when I talk about Nvidia itself. Yeah, there's a lot more to Nvidia, obviously. I get that, but I don't believe that they can continually, overwhelmingly perform. So their growth rates are going to be more moderate. So seeing Nvidia stock kind of selling off a little bit because the market is underwhelmed, not a big surprise. I've been saying that for a while, that there's going to be a certain point where we get to that point where it starts to tip over and growth declines. That being said, of course, I expect we'll see Nvidia drop below 100 though. That's a big number. It's sitting about 125 right now, so you're looking at about a 20% decline. Not a huge decline, but you also have to factor in so many other things that it isn't just, well, look at their growth rates, look at their profits, look at this, look at that. There are other things that you need to consider. First and foremost, the economy. Anybody who's been following my content for any period of time knows that this is the go-to. You start with the economy. Tariffs, taxes, these are things that are going to push unemployment higher. So you're going to see growth rates decline. The economy will contract. The Federal Reserve is going to have to keep interest rates higher for a bit longer. This will restrict economic growth. How does Nvidia perform inside that? But before you can get beyond Nvidia, you got to look at these guys. This is a guy who's not exactly making friends with his previous customers. Now, Tesla, of course, Tesla stock has been sliding somewhat. Topped out about 440, down to about 285, 290 right now. That's a decent sized slide, but when you take a perspective of it, there's probably a good $100 left to take off here. Now, when you look beyond this, Tesla's a company that is valued, like 150 times PE? Now, it's a meme stock. You cannot sit there and say, oh no, the valuation's there. I just said it's 150 times multiple. It's not there. And so what we're seeing is a lot of people are starting to move away. You can see the numbers manifesting out of Europe. Tesla stock itself could easily chop off another 100, and we'll get back to where we were just last summer. maybe we cross below 200 on Tesla. Not a big stretch considering it was at almost 490. Now we're down to 287. That's nearly 50% in a period of time since the election. Of course, the election happened in November. We were at 240. It shot up. Opinions are changing. We'll just leave it at that. Given that, the numbers we're seeing out of Europe for growth in Tesla are declining sharply. This will affect, broadly speaking, all the other stocks. Nvidia is grouped in together with that. QQQ ETF, of course, the NASDAQ, down today because Nvidia is such a big push for, or a big chunk of what's going on there. Taking a look at the broader picture, we're still pretty high, but just last week we hit an all-time high with NASDAQ QQQ ETF, and already we're backing off from there. When you factor in Nvidia, that stock selling off, you can see that it's going to be tough to go back above those because we weren't overwhelmed with growth coming from Nvidia. Then you need to factor in, of course, Tesla and what will happen there. Here's a breakdown. And I think this is such an important thing. Apple, Nvidia, Microsoft, Amazon, Broadcom, Tesla, Meta, Costco at the bottom, and of course Google sitting there with two layers. If Tesla starts to sell off, that's about 4%. If they lose, say, another $100 on Tesla stock, but at the same time, if you look at Nvidia and sitting at 8.5% of QQQ holdings, QQQ ETF holdings, when you break it down like that, if they lose another 20%, that becomes measurable. I believe we've seen the very highs in, say, SPY ETF, QQQ ETF, your usual indexes, and it's because the hyper growth is no longer there, while at the same time we've got an economy that is going to be restricted because of tariffs. Taxes is a big deal. Interest rates are high and unemployment will start moving up. That will affect all stocks in different ways, but broadly speaking, this economy is done. You've seen the highs. And this is where I'm stepping in, looking at some of these opportunities and why I chased a buck last night. Here is SMH ETF. SMH ETF, what I introduced in the very beginning, of course, one of the semiconductor ETFs. This one has dropped significantly. Again, we all point the fingers at the less than overwhelming growth rates from Nvidia and the effects it will have. When you start to kind of look at this, SMH ETF printed its highs previously and since then has struggled, and my take on this is we will definitely be below 150 here pretty soon. Here's another breakdown. Nvidia here, 20% of SMH ETF, Nvidia stock. That's a big chunk. And if we see a 20% decline from 125 to 100 on Nvidia stock, that's a big deal when you consider that SMH ETF holds, the holdings, 20% is Nvidia. And of course, it just becomes sort of a snowball turning into an avalanche from there. I can see SMH ETF dropping below 150 here in the next, say, 3, 4, 6 months. We still have not seen entirely the effects of tariffs. We will. 2, 3, 4 months from now, it's going to be news across the board. And then the fact that these growth stocks, which have really propelled the broader stock market, have stopped growing at those exponential rates, it's not going to be, we're not going to be breaking new highs anytime soon. So SOXX ETF, of course, the competitor, another option when it comes to semiconductor ETFs. Same kind of picture here, broader picture. They're kind of blueprints of each other. Holdings are somewhat different. Now, I actually own Broadcom. I bought Broadcom years ago, not seeing AI. It's getting there, but I've done some videos on my Broadcom stock itself. I do not necessarily see Broadcom as a buy anytime soon, but I won't be selling. But what I am doing is I am actively managing my portfolios. And as you can see in SOXX ETF, Nvidia itself is pushing 8% in top 10 holdings there. All right, SOXS ETF. This is the one I bought in just above 20. Got a little nervous there for a second, but I felt pretty confident that if we didn't see the kind of moves today, that by, say, early next week, Monday, Tuesday, Wednesday, I would see some profits. And sure enough, throughout the night, I woke up this morning and said, fine, hit that button. I'll take it and I'll run. I'm looking for SOXS ETF to fall somewhat. This is the inverse ETF semiconductors. So I do want to caution one thing, however. You don't want to hold this stock, this ETF, for a long period of time. We'll likely see some sideways movements in the semiconductors, but I expect that there will be broad moves soon. We're waiting on economic indicators to show up that prove that there is the tariffs are restricting the economy, while simultaneously the Federal Reserve is forced to keep interest rates higher for longer. Bad news for the broad stock market. Then all of a sudden you start seeing individuals who are sitting on stocks that are just last week at all-time highs, realizing that, you know what, things aren't exactly rosy. Let me take profits while simultaneously let me make some moves in other areas. This is exactly what I'm doing. And you take a look at, say, Tesla, who Elon isn't exactly making best friends with the entire world. We'll just leave it at that. Europe is sitting there saying, yeah, thanks, but no thanks. And you're going to see this in the United States as well. You'll see numbers dropping. Their valuations are disproportionate to reality. So you start to see that sell off. You start to see the broad stock market sell off. You see underperforming Nvidia, that it's no longer blockbuster numbers. And you start to put these little bits and pieces together individually. They show that last week's all-time high in QQQ ETF, we won't be seeing that anytime soon. We will be seeing the tariffs have their effect on the economy. We will be seeing the economy start to grow slower. Still growing, but slower. Eventually, that growing slower gets closer and closer to zero growth, while simultaneously unemployment starts to trend higher and higher and higher. These are going to be, a frog in a boiling water, perhaps. It's a slow process until finally capitulation, or maybe we see something big happening soon. Regardless, this shift is happening. I've been saying for a while that I expected a lot of this to happen, but I expected it to happen in the fall. Now, however, we have other variables. The Trump administration with their tariffs and everything that they're doing there. I didn't really include that into my analysis previously, but nonetheless, this is now what's happening. The effects are basically going to be SOXS ETF. I will see spikes in this and I'll keep taking profits. Whenever I see this thing drop back down, I'll probably put in some orders, 19, 20, maybe 20 half, depending on what's going on at any particular time. But this is where I'm going to be starting to make my money. I've been doing a lot of videos on inverse ETFs because now's the time to be looking at those. This is the time that you really want to sit there and say, you know what? This stock market's not going to look anything like it did in December 2025 versus January 2025. And because of that, that's opportunity to make money in the stock market. Can't stress that enough, but I do want to point out one thing. Do not buy SOXS ETF and think, This is the weekly chart. What happens here is they deal in futures, which deals in, there's forward contracts have interest rate kind of things going on there. So it continuously kind of declines in value. At the same time, those guys want their scratch. So whereas some of these are playing in a certain way, when they're using these forward contracts and they're also removing money on a regular basis because they're paying themselves, you see the mechanics show up like this. So this is one of those ETFs, an inverse ETF, that you want to hit it and quit it real quick. But it's one that I'm probably going to be very active in, whereas I didn't necessarily participate in Nvidia stock's big run up or the Semiconductors ETF's big run up individually. I own Broadcom, have owned it for some time, so I saw some gains. I've done pretty well overall, but now it's time to really kind of be buying a bunch of these inverse ETFs and taking advantage of the opportunities they have there. Make sure to get the Substack email newsletter down below. I'll send you an email letting you know, hey, there's a new video out there. And for those who are the premium subscribers, you get the more detailed, this is what I'm doing specifically in this particular stock and how I'm going to be pulling the trigger in this way. Thanks again for your support. We'll see you in the next video.